With sports betting, I think the odds are usually in favor of the house. In investing, you're the house. You get to play the house, so the odds are in your favor. I don't think you'll ever have 100% conviction. You figured it out, and the market hasn't yet. When you're investing, I always ask, if I didn't own it, would I still buy it today? Just because I own it is giving me a bias, right? How could you have assumed you understood what Amazon would be in 2026? Because in 1997, it was a bookstore. So like you're sitting here today and you'd be like, AI hype, we missed it. I don't think so, because you don't even know who the winners and losers are.
The Break Talk, taking it to another level. Better get ready with your host, Adam and Loretto. The dopest show that you ever heard, ever seen. The podcast about nothing and everything. Yeah, break the break talk. Yeah, break the break talk.
I teach at TMU, and like students there are like third or fourth year business students. They don't know everything. They study this, and they wouldn't be able to answer a lot of those questions.
Yeah. So you teach at TMU as well?
Yeah.
What?
Applied investment management. So it's like running a live investment portfolio in a class. So like this, like you guys are like teaching people on the job. It's the same thing. It's like, here's real money and work with it. And we run it like a fund.
Wow.
So students get to make like real life investment decisions, and they debate and they argue in the class. You get a grade. You can get some money as well. Like we pay out scholarships from the fund. So.
And is there a specific thing you guys are investing in?
All public stocks, like public stocks in Canada or the US.
And it's real money, obviously.
Real money.
Oh, wow.
That's crazy.
Yeah.
So like the school gives them a budget?
No, it was money that was donated like 6 years ago. It was about just over 400,000.
Yeah.
And today the portfolio is worth like 950, 960.
Wow, so they're up.
Yep.
Very good.
Yep.
Has there been like circumstances where they actually lose?
We've sold things where we've lost money, like on paper, but nothing's ever like gone to zero.
Right.
I don't think the portfolio's ever lost money like from the start. It's just kind of grown, but yeah, it started like 2019. Yeah.
Wow.
Yeah, that's pretty amazing.
That's actually.
When did you start like teaching there?
I taught there a few courses in like 2013 and 14. And then I started teaching in 2021. But I've been on the board at TMU or Ryerson since like 2012.
Holy shit.
Yeah. So when this came up, I helped like build this course and like make sure that everything was in place because it's real money. And then they tried it and they taught it at the day school. And then they're like, need someone with industry experience to teach this. And they asked me, and I'm like, sure.
I know this is like a pretty broad question, but like, what's the basic like rule of thumb for it? Like, is it like bankroll management or like what's the rule of thumb for investing? Like, is there a rule of thumb for investing?
In general?
Yeah.
People get confused sometimes with like, I think investing and like speculating and gambling.
Right.
So when we're talking about investing, we're thinking about like a pool of money that we're putting into something that we're looking to liquidate at some point in the future, right?
Mm-hmm.
So for that, the rule of thumb for me is like time in the market. So remaining invested versus trying to time the market. Like to say, is today a good day or is tomorrow a better day? It's just actually being invested, right? So like over time, the compounding of wealth happens because you stay invested as opposed to trying to get in, get out, get in, get out. General rule of thumb is, stay invested and it compounds over time. When you try to get in and out, you pretty much almost usually lose money, right?
What got you into all this?
I got into investing before university. So when I was in high school, like I was actually going to go into health sciences and kinesiology and thought that I would do that and be a teacher, like phys ed or whatever it was.
Yeah.
I took a year off before going to university. I worked at RBC as a teller and changed my mind Like I decided to go into business, not into health sciences, because I worked with some younger guys who had pretty cool careers. They were doing things, on the side. They were talking to me about, what a career would look like in finance. And so after that year, I was like, where could I go to school? I should do business. I should do finance. I found Ryerson, which is now TMU. Um, and then from there, it was take finance, accounting courses. I didn't really love accounting as much as I like finance. And I like the finance side because, it's exciting. Like you get to, you know, in, introduce yourself to companies that you have no idea before you've even seen them, what they do, how they make money, and ask good questions and figure out business models. You deal with like global events all the time. It's the type of career for someone like me who likes to have their hands all over the place, where every day is different, right? So it's not the same day, it's not the same year, it's never the same thing. It kind of rhymes, but not all the time. So I love that. And, I think I was always kind of a teacher with that. So that's why I still teach. But I never regretted moving from like health sciences to like a career in finance or, yeah, investing.
So you love what you do.
I love it. Yeah. I don't think there's a like bias. Like, I think this is one of the greatest jobs in the world, where I get to look at companies, look at countries, look at industries, figure them out, ask questions, learn all the time. I'm constantly learning. I've never figured it all out. No one has. And if they say that, I think that's a big red flag. But it's challenging. I love it. I wouldn't do anything else other than this. Yeah.
There's a lot of ups and downs though, like in what you do, right? Like you said, like going in and out of like investments is where you lose money. But if you're in it for the long term and if it's on a decline, there could be that stress factor or that panic.
Yep.
You have to deal with that. Like that's like a daily thing.
Yeah, it could be daily. It could be longer than that. There's always doubts that come into people's minds when bad things happen. Where an investment is on paper losing money based on what the price the market is giving you. But that's where you have to have a process, right? Where you have to understand what you're investing in, why you're invested in it. And you're constantly testing that. Like we call it a thesis or a theory. Like, I like this company because it has a competitive advantage over its, people in the industry. And because of that, it's able to charge customers a higher price. And because of that, they have higher margin. And because of that, they make more profit. And I think that I'm buying at the right price. But as time goes on, like I'm constantly testing that. Like if something happens, they buy a company, they sell a part of the industry, part of the company, we reevaluate that all the time. So you're constantly looking at that and asking, is anything changed? And sometimes a lot of it's noise. Sometimes there is a signal in it. But yeah, no, it's tough to see things work against you. So you have to have the kind of, again, the process and the thesis in place and constantly ask yourself whether you get it right or wrong. And sometimes you get it right. Sometimes you get it wrong. As long as you get it right more than you get it wrong, you're good.
Yeah. Now which is, so it's going to sound a little funny, but I do a lot of sports betting.
Yep.
Okay. So with sports betting, some of the stuff you use knowledge-wise is similar to investing. It's just not a long-term, like, it's not on a long-term standpoint.
Yeah.
But like, my question to you is like, are you investing in something that like you feel like the number's off? Like you have a feeling of like, let's say this share goes down, but it should be here based on like previous history. And we assume that it's going to be back there.
Yep.
Is that when you get like some sort of advantage on the I don't know what you would call them, not the books, but like the
market?
The
Yeah,
market,
the market,
Other
yeah.
investors?
Yes.
Yeah. I mean, so the question is like, how do you know when to invest? Like,
Exactly.
yeah.
I don't think you'll ever have a concrete, view, usually not, where you're just 100% conviction that you figured it out and the market hasn't yet.
Right.
Because the market, we're talking about like public like
Right.
stock markets, right? They're so big. There's so many people in there, and there's so many professionals. There's so many like average investors, everyday investors. The chances of sort of figuring something out that no one else has looked at, and you're absolutely right, everyone's wrong, is there's small odds to that. It happens. You don't depend on that. You'll never have a time, I don't think, where you'll have that 100% conviction. So you have to sort of say, as part of my process, I know I have to get these call it three things right. I have to have, invest in a great company that has, a view of profitability at some point. It has to have a great management team that's running this company who can execute and do things that it's supposed to do. And then I have to buy it at a good price. If I have those three like legs of a stool, there's going to be risks. There's going to be things that I haven't all figured out yet, but at least I have that. I think with sports betting, the difference is you're right. Like you said, it's shorter term.
Right.
Um, and I think the odds are usually in favor of the house.
Correct.
Whereas in investing, you're the house.
Right.
You get to play the house. You don't have to be the gambler. You can be the house. So the odds are in your favor, right? That's the difference. And sometimes it's just about time, right? So my advantage over someone else buying the same stock, remember I'm buying something, someone's selling something. My view of that stock might be longer term than that person. That person might say, I'm out because I don't like where this company is going in the next 3 months, 6 months, a year, where I'm thinking, I think this company is going to be around for the next 20 years and is going to be a leader and I'm going to make money in it. So my advantage is time, whereas they might not have time for another reason. But I like the markets. Sports betting is fun, right? But in terms of building wealth, you get to be the house in the investing side versus the gambler, right?
Yeah,
Where you typically lose over time.
Right.
Basically, you should stop sports betting.
Yeah.
in reason, right? Like anything, you can't be, thinking about, you're sitting here, you guys are much younger than I am. And if you're thinking about building, a portfolio and wealth for the future, you still got to live. You still got to do those things, but it's within margin, right? Where it's like, if all of my future hopes and dreams in building wealth is based on short-term things that are happening on the weekend or, at a night game, that's tough to do, right? It should be a percentage of what you do or your earnings, right?
That's the whole bankroll management. That's why I asked that, right?
Yeah.
It doesn't relate to.
Well,
it does, but it doesn't.
It's weird because it does in a way, because you're, instead of, as you were saying, the public marking having a take.
Yep.
Obviously, it's known that the house always wins, but you're not really, like, it's tough to explain in depth because you're not really betting against the house.
No.
You're betting against other people. The people affect the market.
Yep.
Right. So, for example, if the Leafs are a heavy favorite, but lump sum of money comes on the other side,
Yep.
that line drops.
Right.
Right. Because other books catch on. They're like, okay, all this money's coming in.
Yep.
We got to adjust the market. So what you're trying to do is, it's called beating the closing line. Right. So that's why that's
now
why
he's teaching you.
Exactly.
Well, no,
That's why we're here.
I just find it
That's
funny
why I'm
because it is similar in a way, but obviously one is on a grander scale of businesses, companies that's been established for years and years, decades, right? As opposed to, like you said, a Sunday night game on TSN.
But it's a good point. There's another part of this, which is, in the very short term, like markets day to day, markets can move up and down as they do. So typically in the very short term, it's based on, like, we call it sentiment, right? Like what is the mood of the market? What is the mood of investors in the short term? That drives part of returns. But over the long term, what really drives return is like growth in the economy, global economy, local economy, a competitive advantage that a company has over someone else, and a great management team that's with the company that can execute and do those things that it does to build wealth. So in the very short term, it's like that. It's like gambling, right? There is that component to it.
Yeah.
But over the long term, what really dominates is like true understanding of like what companies do to make money.
Right. And my other question to you was, is the how big of an impact does the economy play on these markets, right?
Yep.
So with let's say the housing market going down, how does that affect a company? Or let's say um, jobs are decreasing, not enough,
Yep.
income coming in. Now then the economy now plays a factor into that. So is that something you look at seriously, or do you always assume the economy is always gonna go back to its self?
You do like you do have like a top down view of the world to understand. If you're investing in companies that are selling into markets around the world, you have to have a view on kind of the global economy. Like, is it growing? Is it contracting? Is it just sort of growing with, the price of goods or inflation, right? Like, is it great, good, bad? I think you have an understanding of that for, any specific company, like let's say in Canada, things like you said, the housing market, the job market, depends on the company, depends on the industry. Some may not actually have much of a link to Canada, although there are Canadian companies listed in Canada, like in
Mm-hmm.
Toronto. They might not actually have much of a bent towards Canada, so it might not make a difference whether the housing market is doing what it's doing, which is not great, the job market, which is stagnating or maybe getting a little bit worse. For some companies, it may not matter. For banks, for some insurance companies, it might more so than an energy, oil and gas company, right?
Right.
Where their profitability or trajectory is based on like a commodity, which is impacted by the globe, not just what's going
Right.
on in Canada. So it depends, but you always have a view because you want to have an understanding of the backdrop. But the most important thing is to understand the company itself. And then you'll ask those questions like, how impacted are you by Canada's job market getting worse or the housing market? If it was like a timber stock or a lumber stock or
Mm-hmm.
a forestry company, of course, right? Because that's an input into the housing market. So they should see volumes go down. The housing market's not great. Um, there's links, but the company bottom up stuff is most important.
So Stu, if going through all that, you've had to make mistakes along the way because that's how you learn. What was the biggest, or I guess most valuable lesson that you've learned in investing in what you do?
Yes, there's lots of mistakes, and like um, a lot of people don't like to admit mistakes, and I think that's another like say red flag, right? So there's been mistakes along the way for sure. That's how you learn. Um, the the one thing that would stand out to me was not to get overconfident, right? So we have a lot of everyone has like these tendencies or behavioral biases that we all have to investing or anything else in our lives. Being overconfident is pretty dangerous when it comes to investing. To sort of say, I'm always right. I'm never going to admit where I'm possibly wrong or try to figure out where I could be wrong and where I might change my mind at some point. So I learned that uh, pretty early, I guess, in like my career. And like when I started out, the market was coming off of the last, what we call it, the .com boom. So when the internet was a big thing in 1999 and 2000, technology stocks around the world were just, on fire. And then they weren't, everything came crashing down. And I came out of school at that time. And then I came up through this business before the financial crisis in 2008. And that was another learning experience, right? Of like, what would you take away from something like that is, sometimes you could be really wrong. Sometimes you can be too overconfident. So I always look to that as be humble, right? In this business, like you have to know you haven't figured it all out yet. And if you do, that's a problem, right?
Right. So if someone right now wanted to invest, let's just say $1,000,
Yep.
what do you think the best route, or like to put all your eggs in one basket or divvy it up? Like, what do you think?
Yeah, diversification. So like not all your eggs in one basket is a big thing. And a lot of people have talked about that. It's not just my sort of view. $1,000, like, you want to determine when do you need that money, right? So you have to think about your time. If this is something you're putting away to buy potentially buy a home, let's say in 5 years, well, your time horizon 5 years is different than I'm putting it for retirement in 30 years. And that will have an impact on where that money gets invested, how it gets invested.
All right.
But if it's $1,000, someone's, 10 plus years, a broad, we call it ETF or exchange traded fund, would give you exposure to something like the US stock market, right? I don't think you can go wrong with something like that. If that is your, time horizon, you can handle the risk with that, you could always possibly lose money, even though the markets have gone up 6 out of 7 years in the last 10 years. That always doesn't make it, going to happen in the next 10 years. So you have to realize that, but broad exposure like that to a US stock market, which is global still, it's not just all US based companies. I think it's, kind of a safe bet for someone with that time horizon starting out.
So US over Canada for sure in terms of that.
I say the US over Canada because, if we're sitting here in Canada, we work in Canada, you might have a home in Canada or a business. A lot of us are overexposed generally to the Canadian economy and the Canadian market. So the idea of, like, we started talking about diversification is like, how do you get outside of that?
Right.
And it's not to say that, like, a lot of companies you can buy in Canada aren't more global than Canada, but the US market, so the specific market is one in which most of those companies are dealing with customers and industries and business outside of the US. So they are global. That's why I said that.
Right.
But yeah, I think, if you're putting away money every week or every 2 weeks into something like US, Canada, global, international, like, within your risk tolerance, I think there's, historically it's been one of the ways to build wealth for sure.
Now, the safest stock, if there is one, would that be like a dividend stock, in your opinion?
No safe stock.
Mm-hmm.
You know, like, history's littered with, like, examples of, like, the biggest companies in the world.
Yeah, like the Apple's,
Kodak.
Amazon.
Yeah.
Apple's, Amazon, like, those are today. But you go back like 60 years, like Kodak,
Like the phone?
The camera.
Or the camera.
cameras,
Camera.
Yeah.
You
Film.
just
Yeah,
Right?
yeah, yeah,
it's one of the biggest companies in the
Yeah,
world
is that
in
company
the
under
50s
now?
and 60s, right? Doesn't
Yeah.
exist.
yeah. Right.
Think of the big retailers that used to exist, like Eaton's, Sears,
Oh, I remember
Kmart,
Sears.
right?
Yeah.
Those used to be publicly traded companies that were huge, right? At the time, and very successful, and, don't exist today. So there's no safe name, meaning, like, a company like Apple is everything we use today. Most people use more than half the market, and smartphones, great services. It's more than just a hardware company or a phone. But, can you say that for the next 20, 30 years? It's hard to say that. So I don't think there's any, like, safe stock. I mean, dividends are typically a sign of a company that's more mature. So it's got to a point where the money that comes into the business, the cash, they have enough to pay and keep the lights on and grow, and they have more left over to start to pay out to shareholders as kind of a not really a reward, but a piece of the profit, right? That's going to you immediately. Those are perceived as safe, but not always, right? It's more of a sign of maturity and some degree of, like, a quality
Right.
of a company. The safest investment is, I don't know if there's any safe investment, but, like, cash GICs are safe in terms of, like, you probably most likely get your money back.
Sorry,
right?
what is that?
A GIC?
Yeah.
Sorry, guaranteed investment certificate. So if you go to a
Okay.
bank and you go to the bank and you're like, I have $1,000.
Right.
If I give it to you for a year, what interest rate would you give me on this? And then probably today it's like 1 year, maybe like 2%.
Oh.
Right. You'll get your $1,000 and you'll get your 2% on top of that at the end of the year. So it's going to come back to you, right? The bank guarantees that. But what you're missing with that is it's safe, you get your money back, but there's inflation, right? And we know, you guys know what it feels like, what inflation feels like now, the gas pump, the grocery store, the dining, like, you go out dining, restaurants, anywhere you go, travel, things are more expensive. So your 2% isn't keeping up with inflation. So it's safe and then you get your money back, but you're not actually ahead of the game.
Right.
Right.
Yeah, that's actually a big part of it, right? Because, like you said, you stay safe, but you're not really going above. You're just staying on par with like the economy in a sense, right?
Yeah. Or you're losing, right? If
Right.
inflation's 3%, the value of your investment's going down every single year, then inflation's higher than your return.
But it's better than nothing.
It's better than nothing. Like, so if you had cash sitting under your mattress, or in a safety deposit box or something,
Or in a betting account.
or in a betting account, depends on how you're doing. But they're not paying you either. And
They're not. No.
And they're probably earning something on that cash that's sitting around.
They are earning. I'm earning too.
Yeah.
But it's a dogfight.
Yeah.
It's a dogfight.
Yeah.
And it's every night.
Yeah.
The problem is you do it for enjoyment. So it's like it's an entertainment piece.
Yeah,
it's
yeah,
like,
yeah.
you
It
get
is fun.
the thrill out of it.
Yeah.
It's,
But
you're almost paying
there
for
are people that take it too far. And that's
sure.
where like the whole, you got to investment gambling. You got to know the line.
For sure.
Right? So
For sure.
but in a way, investing no matter what it's a gamble no matter how you slice it.
yes,
Like
because
there's safer ways to
the
do it, like you
definition
said.
of gambling is betting or investing into something with an undetermined outcome.
Yeah. So it
that,
is.
technically it
Yep.
is. Yeah.
Like it is scary, but if you wanted to do it, this is the smartest way to do it, and put it to some stock or some sort
And
or a
it's-
company, and you're waiting the long game
Right.
sure.
rather than if the Jays hit a home run in the 9th inning.
Yeah.
Right. Yeah. Like historically, the odds are in your favor investing in certain markets, certain way, like a certain process, right? And time, like we talked about, time is a big thing. But there is a degree of like uncertainty in that. But this is it. What people forget is, times where the market's down, or, there might be a recession or something's happening that's bad in the economy, that's bad in the markets, or whatever it is. That's what pays you the returns you get in the market, right? So if the stock market globally is up 10% a year historically for the last 80 years, right? Like that's the average rate of return, sometimes a lot higher, sometimes lower and negative. But it's that uncertainty which gives you that return, because no one's giving you a free lunch. No one's like, invest in this company and, I'm going to give you, 10% return or 20% return with no risk. Like that makes no sense.
Yeah.
Same
Yeah.
thing with gambling. Like
Yeah.
you, as the odds maker, why would you do that?
Right.
Right.
What's one trend that everybody's missing right now that people should hop on?
Ooh, this is the premium advice. This is
Premium
the,
advice. This is what you pay for.
Yeah.
I don't know if there's a trend that's like an undiscovered, no one's heard of trend. Like I think the world itself is changed over the last number of years, in that what built up, let's call it Western civilization, has been this globalization, right? So, exporting labor and trade outside of your country, and, increasing trade with another country. So you're trading off labor for other things, right? That's allowed companies to grow profitably. Lower taxes has done that. Lower interest rates have done that. That's changed a little, right? So the trend is more towards like figuring out which of those economies, industries are going to be the next kind of up and comers, because it's been the US, it's been others. It's tough to figure that out. I'm not going to say I know
Right.
what the answer is, which is why you diversify in the first place. But certainly trends in technology like artificial intelligence are interesting. It's still pretty early days. Things are moving really fast. But I think that there are some interesting parts of that supply chain of artificial intelligence, whether it's like hardware, semiconductors and chips, or it's, companies themselves that are packaging that and selling that. Commodities have been kind of forgotten for years. So think of like, now we're talking about oil because it's,
Right.
it's
Like
constrained.
gold.
Yeah.
Yeah.
Gold, copper, you guys are in this industry, you understand
Copper's through the roof.
copper's through the roof. Why is that? Because it's the electrification of everything. Cars, sort of. But to power all of this AI and all this infrastructure and all this data moving all around the world, you still need wires, right? And it's not like it's undiscovered, but I think for years, what people were investing in was like these, technology companies that didn't have like hard assets or physical assets. And I think now people are starting to wake up to the world's changing. It's not all about sort of peacetime, like there is, conflict. And commodities are worth, their weight, right? Whether that's gold or crude oil or copper or, even agriculture goods, right? Think about fertilizer, like we call it potash.
What's
The
that?
potash is an input within fertilizer, so it's mined out in Saskatchewan here, um, out of the Middle East as well. That a lot of where that sort of ammonia and chemical products come out of the Middle East are used in
Hmm.
fertilizers to create fertilizers. So that's food security, right? It's a
Isn't
big thing.
fertilizer just like cow shit?
No,
There is part of that,
Oh,
yeah,
okay.
but
there's other
yeah,
fertilizer.
Oh, there is.
What does your dad throw in the grass? Cow shit?
Well, it's in it. Like you can smell it. It's like manure.
there's a manure, but then you think of like your fertilizer pellets, right?
Yeah.
Like the
It's a
chemical stuff.
chemical.
Yeah. Okay.
So used in like, yeah, no, but you're right. But
Yeah.
there's a part of that too. But those are like, I wouldn't say they were forgotten parts of
Right.
like the world or like people didn't discover, but now they're rediscovering that and saying like, oh, there's a lot of value here. Right?
Yeah. So I got a crazy question, which might be kind of crazy, but so with if let's say for example right now you're holding on to a lot of shares in an oil company.
Yep.
Right? So wouldn't now be a good time to sell? Because you're assuming or like some shares because now you're assuming that like unless the war keeps going on,
Yep.
that it's only going to go down, right? And then the market's going to correct itself eventually.
Could be like you could be right. Depends on the company. You'd want to, as an investor, like have a way to determine what's that fair value you think for this company.
Right.
So there's a way you can do that. Like you can do that, with spreadsheets and math and all of that.
Mm-hmm.
You could also do it, common sense. Like, have I made money? Is now like a big part of my wealth exposed to one company in one industry based on the price of a global commodity? And am I okay with that risk? And if I'm not, sure. Like it never hurts. It was one of the rules the first question was like, what are the kind of rules of investing? Is you never really lose by taking profits, right? So taking
Sure.
money off the table, in increments is never a bad thing. But yeah, if you've made a lot of money in something like that and you think that the price of crude is going to go down, you'd want to sell some, diversify, put some somewhere else.
Yeah. Now, do you think
Mm.
people, that come off a big return of investment, you were saying confidence could be a killer.
Yep.
Now, do you think like they always chase for more and more and like a bigger return on investment, they put a little bit more than their percentages say you should put in, and it's what I'm trying to say is, do you think winning could be a problem in that industry?
Yeah, I mean, like if you're always winning, I mean that's great.
Yeah.
Although if you're always winning, someone has to look at that and say like, are you really winning? Because the statistically or odds are you
Not
probably
sustainable.
can't be, right?
Yeah.
But there is a tendency people have that, what just happened, like last year, let's say in Canada, if you invested in all of the listed companies in the Toronto Stock Exchange, right? You owned that as a basket of like, that was your portfolio, you would have been up 34%, right?
Wow.
In a year. So the danger is like what investors might think is like, well, 2025 is a great year. I own Canada, the Canadian stock market in a security. Well, this year is going to be up something, right? It can't be
Right.
down.
Yeah.
But actually, we've done the research and you go back year to year, it's just random, right? Like last year's returns actually have no relevance in this year's returns,
Wow.
right?
That's
You
weird
just
though,
don't
no?
know.
Yeah, I mean, there is momentum, like there is building momentum, but over 100 years of data, will tell you that 1 year's returns from the next have nothing to do with the previous years, the exact previous years. So the danger would be is you think, well, I made 34% in Canada. I'm going to double up on Canada because 2026 is going to be better than 2025.
Right.
And that's where you have to be diversified, humble, not overconfident, and know, okay, I've made some money there. Am I comfortable with that same amount in my portfolio just to that? Why not somewhere else in the world, right?
Mm. Yeah.
That's a weird trend, right? Where it's kind of scary because you don't know the future, but that's what you do, right?
Yeah.
It's
Short term, the market's, and short term could be is a year, right? And investing a year is short, 3 years is short. You think of like 5 years is like where you start to, you invest in something. Like think of, like the business we're sitting in here, when it starts out, if the next day you value the business, is it going to be much different? Probably not.
No.
yeah,
You have a view of 10 years in the future, but if someone walks in the door 2 days after you open and says, I'll give you this for it, and you're thinking, well, should I take it? Because is that the value of the firm? It's like what happens in the stock market, right?
fair.
It's not determined the next day. Just because someone, offered a price doesn't really mean that's the value. And that's what that year to year is like. It could be so variable.
Yeah.
So year to year, obviously right now is a weird time in terms of the housing market, but a lot of people, like especially growing up, like, like parents and grandparents, everyone always says like invest your money, buy a property, buy a house, like get a condo or a commercial property. Would you say that's a basic way of investing money or a bad way of investing your money? Or would you rather like say like, you know what, you should look into buying into a stock or a business? Like what would you suggest?
I think the discipline of buying a home, let's put like Toronto GTA aside or Canada aside, like just residential real estate or commercial, like the forced savings that is like you have a mortgage, you have to pay it off. You hope that the home appreciates greater than the interest rate that you have on your mortgage so that you're building wealth. But the forced savings that I've got to, pay this off and essentially build up equity is a great thing, right? If you were to say every week I'm going to put the equivalent of a mortgage into the stock market, that would be a great thing too, right? Now, your return in the stock market historically has been higher than in real estate, but that doesn't mean it's better.
Right.
Like, I don't think so. I think any way where you get someone to force savings and build up. So all savings is like you're sacrificing tomorrow, today for tomorrow. That's all it is, right? But that discipline of whether it's real estate, whether it's a stock market, whether it's something like a business, I think that that's the most important thing. Real estate itself is, we know what's going on in Toronto and parts of Canada. I think the playbook of what was the last 20 years, I think that's kind of come to an end and people have realized that. Now, that doesn't mean you have to make the decision never to own, but you have to do the math, right? Does it make sense to rent? Does it make sense to own? But the sense of sort of entitled to own, I don't think should be a thing.
Yeah.
Right.
I agree. So Stu, what's your day to day? So we talked a little bit about investing, but what's your day to day? What's your job look like?
Yeah, are you like on the Wolf of Wall Street type? Like that's what I'm picturing here.
Jordan.
Yeah, Jordan. What's it? Jordan Belfort.
Jordan without the hair.
Yeah.
Walter
or
White.
the Ferrari.
Yes.
Or the Lambo or the mansion. Yeah.
What was he
sure.
taking? What were those things called?
Like the drug?
Yeah,
Ludes?
it was the Ludes.
Ludes.
Yeah. that was the movie where I was like, dude, I'm gonna be a fucking investor. Like, I watched that movie and I was like, I'm gonna invest, man.
See, I got that early feeling with the first Wall Street,
Right.
Which was 1987 with Charlie Sheen. That's what got me to like early days in high school. Like that's pretty cool. So I get it. When I saw Wolf of Wall Street, I had a lot of people because I was working in that sort of trading room environment, and they would always ask like, "Is that really what it's like?" And there are parts of that time that was similar, not the same way, but yeah, there's some crazy stuff that certainly happened. But
that's awesome.
That's not me today for sure.
Yeah.
My day to day is I get up, whether I go into the office or I'm working at home or going to see clients on the road, I'm, scanning the news. So I look at the Financial Times, the Wall Street Journal. I get a lot of research sent to me from different research providers all over the world. I kind of go through that. I check in with our research team on what they're doing or what they're seeing. So if I have a meeting come up with a client and they're like, what's going on? And I have a question about gold or uranium or oil or a company that we're invested in, I'm aware. But then it's after that, it's kind of dealing with what's going on with my clients, right? So it could be anything from I need money for something in my life and we need to take it out of a portfolio, or I have something that has happened and I have money to put in a portfolio, or yeah, it could be, it's random, which
Yeah.
is why I love it.
So what's your actual job title? Like what's your on the book?
So investment counselor, and on the private wealth side at the company is Mower. So Mawer. Most
Wow.
people pronounce it as Mauer.
Mauer.
That's how I said it.
Yeah.
I mean, it's phonetically it's Mauer. It's Mower.
Yeah.
Most people in Toronto know Mauer.
Mauer.
Yeah.
Yeah. Don't matter how you pronounce it, as long as it makes you money, right?
Yes.
Yeah.
Yeah.
That's
So is your company public?
No, we're private, employee owned. So we don't have external like shareholders. There's everyone who's in the company. Sorry, if you're a shareholder, you have to be a part of the company. An active employee can be retired. So very different. I've worked at public companies that have external shareholders, so they're listed on like a stock exchange. And the difference is like when you're private, you guys know, like here, is you don't have to go and answer to investors every 3 months like you do if you're a public company. Every 3 months, you have to put out a report for your financials, typically hold a call with your investors. Sometimes that means you think shorter term, right? So as you're a private company, you really don't have that sort of every 3 months check-in. So you can think longer term, you can act different, you can think of your business differently, you can think of your customers differently as well.
That's cool.
Yeah.
So that's not like a normal thing? Like, or it's less common?
Less common today. So there are fewer like private wealth management firms of our size in Canada. There are some that are there are a few still left that are smaller, but who dominates mostly in Canada in the wealth management space? It's the banks, the insurance companies.
Right.
Yeah.
So someone would come to you and like just they're paying you to help. You're helping them invest money in different things that they're say interested in, or you tell them this is a good opportunity. Like,
Yep.
that's what it is?
Yeah. So we like wealth management, like the portfolio investing is one part of it. The other part of it is building, a very comprehensive financial plan. So kind of like a structured timeline for those families or those businesses, their cash flows in and out, understanding where they're going to need their money, understanding tax, understanding future tax,
Jesus.
things like insurance as well. So
Wow.
what we try to deliver to our clients is like that peace of mind that, we have the resources, the tools, the expertise, and experience to help you and your family manage your future, right? Whether that's saving for the, home or second home, putting your kids through school, retiring the way you want, passing on to the next generation, all of those things. So the actual investing side is like the means to an end, right? But you have to start with a plan. Like what's
Right.
the money for, right?
Well, you have to understand their timeline, right? Because that'll probably change what they invest in and everything.
For sure.
Yeah.
Yeah.
Wow.
Yeah.
And doesn't the timeline affect, if it's a stock, the riskiness of what you're investing into,
For sure.
right?
Right. If it's, if someone says, I need this money in 2 years, and I also want to earn 10% a year for the next 2 years. You'd have a conversation about expectations and how realistic that is.
Yeah.
That's hard to do. We would never do that. We never promise that. That's 2 years is too short to say like, let's put all of your money into a bunch of stocks in a portfolio. Um, but we would work with people to determine that, right? To really ask those questions, to understand like what it is, when it is, and then have a good conversation about what they've done in the past in investing. How comfortable are they with, the market down 10% a day? You log into your account, you see, oh, I'm down, 50,000, $100,000. Um, you
Fuck.
know, how's that going to look? Sometimes
Yeah, but I
you
think that's all. Like I think you have to know. In my like, what I'm getting from this is, I think you have to have. You can't go into this without any like background knowledge. I think you need to know the little like being down.
Well, that's his job.
No, I
Say,
know
explain that.
exactly because
Yeah.
it's like it's always gonna go down a day, but it's I guess it's just understanding how it works is the biggest thing. Like
Yeah.
it's gonna go down maybe for 2 months, 3 months, 4 months, 5 months, but I'm sure you guys obviously know where it's supposed to be and right.
Yeah, like you have again like history, right? That says here's what the market has historically done, right? During a period like a boom, a bust.
Yeah.
The longest period of, you put in money, you never saw your money again, or you didn't break even for 20, 30 years.
Wow.
Like, how would you feel about that?
That
Like
yeah.
if you,
That's
I'm good.
that's a
I'm good.
long term
I'm good.
yeah,
investment.
like
Wow.
if you in, the longest,
Not even breaking even in 30 years?
right, after
Wow.
after inflation, so real money.
Yeah.
So, the longest stretch of time where like the US market lost money in real dollars was like at the peak in 1929, the crash. There was before the Great Depression, right? There was this crash in the stock market. Market really didn't recover until like 1954,
Wow.
right? So you went through the Great Depression, World War II, post World War II, and then you would have saw your money back. That's been the longest period of time where people have put in money at a top and haven't recovered.
That's crazy.
The next time was technology, right? In like 2001, which is March 2001, most technology names really, you didn't get your money back for, 10 plus years. Some actually you still haven't, right? So,
Wow.
you help people understand that can happen. And there's a reason if you ever buy like mutual funds or ETFs or whatever from a bank or online or wherever, for us, there's always a disclaimer, right? It's past performance isn't guarantee future performance, right? It's there for a reason. It's
Right.
Yeah.
not just like because the legal team says you have to have it. It's a fact, right?
Yeah.
Yeah.
So is right now one of those times where you're not saying that it's a terrible time, but is it one of those worrisome moments?
I think it's good. I think because everything's down, no?
Actually, so we're here. What is it? April 15th.
Yes.
Yeah.
Okay, April 15th. Today at 4 o'clock, the U.S. market. So when I keep saying U.S. market, it's an index. It's called the S&P 500, Standard and Poor's 500 index. 500 companies in the U.S. Right in a basket, all time highs. Closed at
Really?
an all time high today. The Nasdaq, which is like a technology
I
index,
actually know what that one is. That's like the biggest one.
yep,
Yeah.
that closed at an all time high today.
Wow.
So
Really?
despite, here's the randomness, kind of, right?
That's weird.
But if back up to 3 weeks ago, or at the start of the conflict, which was like February 28th, you saw oil shoot up overnight, still kind of elevated, and markets in the U.S., not really Canada, but other parts of the world that are dependent on oil, declined, right? But now you're kind of back to all-time highs on, in technology in the US. It's interesting. So yeah, I mean, is it a good time? I think it's always a good time, right? If your time allows it, right?
Yeah.
Because at the worst time, so if I said to you and like you guys, I know the future in January 2020, right? I'm like, my outlook for this year is there's going to be a global pandemic. The global economy is going to shut down. We're going to force you to sit in your house. You're going to shut your business down. You'll get some grants from governments, but and it's going to be because of a health scare, and that's it. Like you would have taken all your money and threw it under a mattress and been like, "Thanks, Stu's great advice was not to invest."
Yeah.
And then the market actually didn't move on anything until February 2020. And from the peak in February 2020, it went down for 34 days, bottomed, and went back up in 3 months during like the biggest health pandemic ever in our time, right? For the last 100 years.
Wow.
So you think like you knew all that. If you knew all that, you would have made the wrong decision of like throwing your money, and you would never. And there's people who did that. There's people who got out and have never really got back in because they keep saying it's too expensive. It's not a good time. There's a war. There's a new president. There's new whatever it is, right? There's always something.
You just never know. You never really know. Like,
Well, they're
it
scared.
does weird things. Like
Yeah.
I brought up a weird time now. Is it a bad time to invest? And he's finished saying that it's like the two things are the all-time high.
Well, you have to know what to invest in, and like people that are, you know,
Well, it's still scary. It's still like, you know, if you're still investing a lot of money or however much money, it means something to you,
for sure.
or you don't want to lose it,
Yeah.
right? So it's, you think about these things, but you just don't know.
I think the saying is scared money don't make money.
That,
So
you're right. You're right.
If you don't really, want to
Take risk.
Yeah, if you don't want to take a risk, then
You don't get paid.
you don't
for
get
it.
paid,
Right.
right? You
Yep.
can't be the guy who's like, oh fuck, like I hate when people are like, man, I was looking at Bitcoin, but like fuck it, like didn't buy it, but like trust me, bro, like I was telling everyone to buy it. It's like, okay, did you buy it? No.
Yeah.
But I
Yeah.
told everyone to buy it. It's
Yeah.
like,
Well, you should have bought it.
you should exactly,
Yeah,
right?
you should have bought it.
Like,
And you wouldn't be talking to me right now.
exactly. So you get those guys, and that's my other question: is
Yep.
how do you feel about that
The crypto,
market? Yeah, because
how's
that's a
that?
whole,
Is that
is that a
relate to
whole
you?
different ball game for you? Or?
it's outside of what we do at More.
Yeah.
Like we don't have any products that we use with our clients that are digital assets. So crypto, so Bitcoin, ETH, anything like that. My personal view is if you're investing in that, it should be a pretty small percentage of your overall
Yeah, that's the
assets,
gambling side.
right? Yeah,
That's the gambling side of stuff.
because like like I always ask people like what has that solved for the world
Nothing yet.
that Visa hasn't or MasterCard hasn't. So payments wise, so I know Bitcoin's not used for transactions, but it's formed as a form of payment. Now it's a store of value, meaning like it's liquid gold, people call it. Then people use it as a way to build
Stash money.
stash money.
Yeah.
I mean, that's, I think, what it's used for.
Yeah.
But some people are like, well, it's good for, inflation because, inflation's going up and Bitcoin, there's only a certain number of Bitcoins ever.
Yeah.
That's true. But its track record of actually holding up with inflation is not great. So when inflation spiked up, it actually didn't do its job of like providing that dynamic hedge, we call it. But I don't invest in cryptocurrency myself. If I
Really?
speak to clients, yeah,
Wow.
there's nothing that
Like not even a little dabble on Bitcoin, like just a little experiment.
I did
Yeah.
in a previous role where I was a strategist, where I looked over like a whole. I was kind of the advisor to the advisors,
Mm-hmm.
and I did a lot of research on cryptocurrency, digital assets. I did buy some then because that was a way for me to like, if I'm going to read about this stuff and like go out and figure out this industry, it's easier if I'm actually invested.
Right.
I haven't since been in it. To me, it seems more of a distraction.
Wow.
Well, you know what though? I
Hey.
kind of agree because it, like from what I understand, and I'm not invested in it at all, but I know people who are, and I remember I was in trade school and it was Trump's inauguration.
Yep.
And they had it on the computers, like waiting to see if he mentions the word, one of the things that they were invested in. And they were just waiting for him just to mention one word. And they were like, and then we're going to fuck it. We're going to make it. Like it was and I was like, what the fuck do you have your money in?
Yeah, it's like a hype thing.
Like, it was just weird.
Yeah.
And I don't get it, but
Yeah. Like, again, like I think what the value of Bitcoin is, or any of those today, is that someone's going to pay you more for it. Based on what? There's no fundamental reason for that other than someone's going to bail you out. Right? Now the technology, like which is built on, which is like blockchain technology, is pretty cool. They're not all built the same from my understanding, and I'm not a complete expert. But I do think that those currencies that sit on top of it, if you call them currencies, you're buying it because you think someone's going to give you more for it in the future based on what value?
Based
Right.
on nothing though. That's
But
the
I
scary
feel like
part
it's
about
based
it.
on Bitcoin. I feel like it's all just based on what Bitcoin did. Now they're trying to find the next Bitcoin, and everyone's saying that this is going to be the next Bitcoin. This is what, but it's like,
Yep.
what the fuck? What even is it? Like,
It's a way to transfer money from one entity to the other without
Tracing
tracing
track
it,
history.
right?
It's a discrete transaction that you could honestly what people use it for, it's untraced. So if you get a lump sum of money, it's more shady, in my opinion. I think it's
Yeah,
a untraceable transaction.
wow.
yeah,
So you can't trace it. But I do think Bitcoin is the only safe one where I do believe that it will hold its value.
yep,
Um, and maybe Ethereum, but I wouldn't
yep,
be confident in that. And that's it. All the other ones I think are just like, I don't even know what to call it. It's
yeah.
like hype.
Dogecoin and
Yeah,
all
yeah,
those.
Dogecoin. I
Yeah,
think it's just like a trend,
for sure.
But
and
what
it's
controls that stuff? Like, I don't know if that's a
people,
stupid
us.
question. Like,
We do.
if we all buy this, then it would be through the roof.
Yes. If
Like,
yeah,
like what?
Well, there's like because there's only a certain amount, right, that comes out every year, and then after a certain time, they're going to stop. There's like the program, the algorithm will stop issuing Bitcoin,
right.
right? So that's the inherent value in it is because it's scarce. There's few of it, and that's why people link it to like gold or like commodities.
So what's
but
the
it's different.
difference in that then? Like in what you do? So like, how does that get controlled?
What?
Companies control the market
Companies
as
control it
opposed to the
completely.
people.
Hmm.
Yeah. So you could have a coin that you can make a coin. You make
Yeah.
a coin, call it Loretto's coin. You get
Yeah.
100,000
Go ahead.
people
Sounds
to
cool.
invest, $1 million each.
And then it's gonna be
That
through the
fucking
roof.
coin is going to go through the roof, but then people are like, yeah, this guy Loretto sucks. Everyone takes their money out and then it plummets. And then, Elon Musk says something about something and everyone's like, oh, fuck, Elon Musk said this. Dump, pump, 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 pump,
Stupid.
pump. And then they all, isn't that right? Is that kind
Yeah,
of
I
how it
mean,
works? Yeah.
it's based on hype. It's based on momentum, right?
Right.
So people bidding up the price until it's not. Like you're always looking for that incremental buyer. And this is like, look, you can go back hundreds of years in time to other hyped securities or assets or investments, right? Tulips in the Netherlands 400 years ago.
Never heard of that.
This is called the tulip mania. So basically, tulips,
Like the flower?
the flower,
Oh, okay.
were valued as a precious commodity, right? And speculators would bid up the price of tulips based on what they perceived as the supply of tulips coming on market. There's a big tulip sort of price
What the hell?
momentum run up
Really?
and
What?
crash.
Damn.
Yeah, you look up the tulip. Yeah,
It's like a tulip epidemic.
yeah. And you go back. Fast forward. You go back in time a little bit. You go to the railroads, right? When railroad companies started, it was like the new technology, like the new EVs. Price of railroad stocks at the time were skyrocketing. They were like technology, right?
Mm.
They came crashing down, right? And so tulips weren't. Like tulip mania is based like kind of like Bitcoin, right? Like there's no, what's the value based on, right? It's utility. People can use it to like hold a tulip or whatever, right?
Yeah.
Railroads actually had earnings and sales and everything like that and assets, right?
That makes sense.
They just got overhyped, right?
Right.
But over time, like go back in the last 100, 200 years, there's so many examples of these hypes, right? Tech stocks in 2000, like I said, right? There are a whole bunch of stocks in the 50s and 60s, the same thing. Everyone piled into because you can't lose until the last buyer you can't find and the price drops.
But how do you stay away from like the hype, that like all that hype stuff? Like, how do you know? Like, you just don't.
He's been in the game, dude.
Yeah, I don't know.
He's been in the game,
You
dude.
it's exciting, right? It's exciting to like when Bitcoin was big thing, like to read about it and to follow it and like to understand it. But I think that's why like diversification works is like I don't have to worry about catching the grand slam. Like in investing, I don't have to hit grand slams all day, right? I can hit singles and doubles, get on base, score, like do that every inning, and I'm going to win. If I'm sitting back waiting for that pitch and I'm just trying to hit grand slams, like that's the difference. Like as an analogy.
That's a great analogy.
That's a great analogy,
Right?
actually.
Because like
that made a lot of sense to me.
yeah, like you know, when I started in this business, you're like, oh, you just got to find that one great idea. That one great idea is going to like carry me through.
Right.
And you start to realize like I need a lot of really good ideas. I don't need just one great idea. And that's how you build a portfolio. That's how you like endure the ups and downs of the market. Is not just like one stock, right?
Yeah.
Um,
That was
That
really,
makes sense.
Yeah.
Yeah.
I understand it now.
no, I don't-
Yeah.
I'm not saying I understand everything. Is again,
No,
like,
but
we're always students of the
and
market.
that's kind of how you lose money long term if you keep trying to hit these grand slams, right?
You could, yeah,
Or
for
you
sure.
hit one.
Or you hit one.
Or you hit one,
Or you hit one.
Yeah.
and then you're overconfident,
And then
the
you're-
next thing
yeah,
comes along,
exactly.
and you miss it out. You know, if you stuck in railroad stocks since 1860, you would have missed the whole lot of. I figured it out. I bought railroad stocks when they were on the dip. I held them for 180 years.
Yeah.
You would have missed a lot of other things, right?
Wow. So there's really nothing that's in history shows that nothing. Well, I guess there's always something that comes out that's better.
Yep.
So now I would believe that you kind of have to determine the future in the sense, right? You have to be like a little, genie here. And you have to only assume that all roads lead to AI.
Hmm.
So is that where you guys are like, is that a hype train too, in a sense, right? Because that's the only thing
Or
talked
everyone
about.
gets on that train and it crashes.
Right. That's the thing. It's
Yeah.
like, is that a
Because that's
hype
what
train?
everyone's talking about.
Yeah, like
Is
robots
AI.
are going to take the jobs, and it's like
Right.
invest in robots and
For
this
sure.
and that. That sounds like a hype thing too.
I mean, there's certainly parts of the industry where you would say it's hot, right? I think some of that has actually cooled off in the last year.
Mm-hmm.
People are starting to question companies like Amazon, Google, Meta, or Facebook spending hundreds of millions of dollars a year each to build out infrastructure for AI, like data centers, spending on semiconductor chips, building real things to handle all of this future AI use. The market's actually been pushing back on that. So the hype was probably at its peak-ish
Oh, so the hype.
last year,
Okay.
You missed it.
and it's
Yeah.
missed it.
Missed the train.
But it's early, right? Because like I look at AI today and go, when we were talking about the internet, you guys weren't even around yet. In
No, we were
the
just
late
born.
90s, right? In the late 90s,
Yeah.
you weren't around,
No,
we weren't born.
right?
2001.
But when people were talking about the internet, how could you have assumed you understood in 1999 what Amazon would be in 2026?
It's true.
Impossible.
Because in 1997 it was a bookstore. It was an online bookstore. Netflix actually had physical DVDs that they would mail out.
Really?
There's no
Really?
streaming.
That's how it started?
That's how it started. Right?
What the
What?
fuck?
That
I
sounds
didn't
like
even
a
know that.
blockbuster.
So before, exactly like Blockbuster, but it was an online subscription, like Blockbuster, but
Oh,
no
so they've
stores.
been around.
They've been around.
Oh,
I had no
I didn't know
idea.
that. That's crazy.
So if you couldn't figure out, like you couldn't have figured out streaming in 1999, 2000, 2001, whenever Netflix really did come around. I don't think it was then, but you couldn't figure out until streaming was a thing that what Netflix could be. You couldn't figure out online delivery until the internet was built out. So you couldn't figure out that Amazon would have turned itself into this massive tech company and competing with every largest retailer in the world, but online with no stores. If you would have said that in 1990, people think you're crazy.
Yeah, it's true.
So like you're sitting here today and you'd be like, AI hype, we missed it. I don't think so, because you don't even know who the winners and losers are. You
Yeah.
can't even figure that out. So it's exciting because like you still have lots of time. There's still going to be a lot of winners. There's going to be losers. Microsoft was around the late 90s. You could have pictured what Microsoft became today until you understood what the internet looked like. It's not dial-up.
yeah.
Yeah.
Fast. You could sell your products online. You don't need a store. You don't need a physical disc. You wouldn't have known that. So I don't know. I think today AI, it's too early.
Wow.
So what research are you doing now? Like you said earlier, like you talk to your research team, you listen to the news. What kind of news is like out there for like stocks and stuff? And is there phony news? Like, is that a thing, or is it all legit?
No, it's not. Not
No.
all legit.
The news is not legit.
No, but I'm saying, well, I know the news outlet isn't. That's what
Yeah.
I'm saying. But he's not watching CP24.
Yeah, that's true.
Yeah.
That's true. You got your own. You wake up and just call it. You call your research team.
Well, they put out. They'll put out, notes,
Yeah.
right? Like we have a central system where we can see what people are working on. So you get a sense of like what's their day to day, things that they're doing, things that they're seeing. So our research team goes out and speaks with companies, goes out on the road, does trips. That's a form of research, right? It's like, hey, I went to Asia. I spoke with a bunch of tech companies and a bunch of banks.
Oh my god.
Here's what they're saying. Public companies speak every 3 months to investors. So right now, we call it the earnings season. So it's the time where companies who reported at the end of March, they have conference calls or calls with their investors. So you get to learn a lot about what's going on in the company, the industry. You don't get to ask those questions because they're reserved for certain people.
Yeah.
But you get a sense from what's going on from the questions and all of that, and you spend a lot of time doing that. So it's
But
really
they
cool.
would never they would never say they wouldn't say anything negative though about the company because they want your money. So why would they be like, yeah, guys, so like, thanks to all the investors or whatever, but unfortunately
we screwed up.
Yeah, like that.
we're
is
fucked.
so
Things are getting worse.
yeah, but keep staying invested.
So you're right. Like there's a degree of skepticism you have to have as an investor.
That's where you got to be smart.
So it's like, what's the motivation on the other side? What's the motivation of the buyer or the seller that I'm dealing with? What's the motivation of the company that I'm doing work on? Are they aligned? So you could say, if I'm looking at any company, like one of the things you might want to look at is how invested is that management team in the stock of the company that they're running? Do they have a significant amount of wealth in that company, or is it whatever they get from the company, they take it out?
Right.
That's, one way of saying that. So it's like, would I really trust what you're saying or what you're doing?
Yeah.
But you also have a degree of skepticism, right? That what you're being told every 3 months is a little bit rosier. And that's where good questions, like someone who has experience will ask, right? Hey, I was talking to your customers, or someone in your industry was saying something different. You're saying this. Can you explain it?
You gotta ask those hard hitting ones.
Yeah.
Yeah. Put them on the fence bit.
So it was like media days.
Yeah.
It's like media days.
Yeah.
It all goes back to sports.
They're all media trades.
Yeah.
The Break Talk podcast is brought to you by Skilled Trades College. Looking to get involved with the trades but don't know where to start? Where can you find all the info, Loretto?
Head over to skilledtradescollege.ca and get the skills to pay the bills.
It all comes back to sports.
Speaking about sports,
Yep.
Stu, before you go, we got to get your GOAT. All right.
yeah, let's
this is-
dissect
okay.
you now.
Yeah,
Dissect me.
this is what we call break time. All right. It is time to build your GOAT. We're going to give you 4 categories. The 4 categories are mindset, athleticism, clutch factor, and trash talk. You have to pick one athlete for each, but you cannot repeat the same name. You have to build your version of the GOAT.
Trash talk, Marshawn.
I love that.
I'm not just saying that because I'm surrounded by like Bruins gear, but
Yeah.
Yeah,
And a
yes,
Marshawn.
yeah, you have to say that.
Yeah. That's a good one.
Uh,
I can read them out to you if you need.
give me the first one again, because
Mindset.
mindset.
Like the most locked in player, like, you couldn't access them.
Before the most recent period, so the last few weeks and years, I'd say Tiger. I had to say before the last few weeks.
Or last.
As a full-time PGA Tour professional,
That's a good one.
in his day.
In his day.
Yeah.
I would question his mindset.
Well, now
Then?
No, he's saying back then.
He's been having DUIs since like I was born, dude.
No. When he was in his
yeah.
prime, after he won his few.
Oh, so this is a while back.
I'm saying it before.
Yeah.
Oh, okay.
Not in the last few years.
Yeah.
Unfortunately,
He's
and
still a goat, in my opinion.
I think so.
Yeah.
yeah, I don't know. I think that the things that he did, and you look at the video back then of Tiger, the shots that he made, the pressure that he was under.
Especially with his dad. I
Yeah,
saw that documentary.
yeah,
That
that's pretty crazy.
no one's ever said that. That was good.
Yeah.
I like that.
Yeah.
That was good. Athleticism.
Athleticism. Any sport.
Any sport. Any year, like anything.
I want to go wrestling.
Okay.
I mean, wrestling is. I mean,
That's
those-
so underrated, man.
Yeah, I agree.
Those guys, like, say what you want. Like, we all know what it is, but
Dude, that's so underrated.
those guys
I
are
grew up on
so
that.
fit,
Yeah,
Yes,
they
man.
are.
Yes, and they're
And they-
massive, jumping around.
and
the,
they travel all the time.
Yes,
They're
yes.
beat up. They're so.
that's a very underrated take.
Yeah.
They're fucking animals, man.
Yeah. I go far back in wrestling. For me, it's not, but for you guys, it probably is.
He's gonna say my goat. Watch, you probably don't remember my goat, but I'm curious if you're gonna say who I said.
I say the Warrior.
Oh, okay. No, I said Brock Lesnar
Okay.
for
Yeah.
for
Yeah.
athlete.
Yeah.
But yeah, Ultimate Warrior. Yeah, he's up there.
That's good. Okay.
That's awesome.
Clutch factor. This is a very different GOAT. I like this. Clutch factor now. Most clutch athlete.
Wait, Warrior died from steroid overdose, no? Or
He
heart
did,
attack?
yeah. Yeah.
You were still thinking about that.
But we didn't say how he became athletic. You were like the most clean.
He thought he got away
Well,
with that one.
Yeah.
Lester's on juice too,
Yeah.
so we're not
Sure,
gonna cut him out.
sure.
Yeah.
Wrestling, I mean, I think it goes with the territory.
Yeah,
I mean,
it does.
you
They're
can't
all
stack
dudes.
on all that muscle and
Yeah,
at that
yeah.
height
They're
forever.
still athletic.
They're still
athletic,
athletic. We're not
yeah.
taking
Yeah.
it away from
Yeah.
them.
Yeah.
But I just forgot. I was thinking about Warrior. I was like, oh, he's dead. How did he die?
Yeah.
Yeah, heart attack.
You didn't let that one
Yeah.
slip.
Well, I was just
yeah.
processing in my brain.
Clutch factor.
Clutch factor. Mahomes?
Oh my god, dude!
Now, that's Adam's like, now you just
God.
made Adam's
Dude,
the
you're
happiest
building
guy.
the best fucking goat.
That was really good.
Was that yours?
Yeah, I'm a Chiefs fan.
Okay.
But
yeah, he loves Mahomes.
Yeah,
He's
yeah.
He's a Chiefs
That's
guy.
awesome, dude.
Dude, that was a very good GOAT. I got to say, that's up there.
Yeah,
You know what?
I love
That's
that.
up there, dude.
I figure with wrestling, and not because they're looking at UFC too, you could have went number of directions there. But
Mhm.
yeah, I think wrestling, like, people always think, like,
It's fake.
yeah, but look at it, like, to come up to that level,
Yep.
like the amateur all the way up, like that's tough. That's like 80s hockey fighting.
Yeah.
Right?
Yeah, it's
That's
true.
tough.
And what I was when I was saying my goat is that we can take a guy like, Ultimate Warrior, for example, who besides how he looks,
Yep.
right? These guys are doing all this endurance, right? They're traveling on the road 24/7.
Yep.
They're taking bumps, they're real bumps, these suplexes and stuff
Huge.
like that. The outcome is staged,
Yep.
but the moves aren't staged, right? So
sure.
they're still taking real bumps, and they're like, no one understands how hard it is to move like that at like 270 pounds, right?
That's
Like
speed.
these guys are
Yeah.
massive dudes moving like that, jumping off ladders and tables and all that stuff. So I think it is a very underrated.
You're putting on a show.
Yeah.
Like,
Yeah.
no matter what, like, you can't come out flat.
Yeah.
I mean, the way he would run into the ring,
Yeah.
like every night.
Yeah.
Well, he might have had a little extra energy in other ways, but
Yeah. Well,
that's part of it. They did all that stuff and they still perform. So
And then Lesnar did all that, went
Yeah.
to UFC, became the
yeah,
champion there.
that was crazy.
Yeah.
But that just goes to show you that they're actually real athletes. They're not
Oh,
just
yeah,
acting,
yeah,
right?
yeah.
It's the whole nine.
And then he
Yeah.
got busted for PEDs in UFC,
Yeah,
and then went back to WWE where it's all jolly.
Under the ring.
Yeah.
And now he's just living his life.
Yeah.
He just
Yeah.
watches UFC fights. And he just sits there in the crowd and they put the camera on him and you're like, this guy's not okay right now.
Yeah.
Yeah.
Well, I'm going to ask you guys, like, if you're investing, you're starting investing, where would you start?
The break talk.
That's a good question. For me, it would probably be like, what would I use in a sense?
Yep.
Probably Wealth Simple, just
Yep.
because it seems
Yep.
I've used it before,
Yep.
and I've had dividend stocks before.
Yep.
And I used to be invested in Ethereum, and then I pulled out a long time, which I messed up on because I didn't know.
Yep.
But I would probably do. I use the word safe, even though I know it's not safe.
Yeah.
But let's just call them popular dividend stocks that have been around for decades.
Yep.
Is where I would start.
Good start.
Yeah. Or Nasdaq. I had
sure.
Nasdaq too.
Yep.
I don't even know where I'd start. Like,
Yep.
honestly, like I have no idea. Like I was telling you, I told you I was going to have stupid questions or whatever, because I have no idea about any of this stuff.
No stupid question unless it's not asked.
Yeah.
Yeah.
I for me, it's tough because, like, of course everyone hates losing money, and
Yeah.
I understand there's risks to make money.
Yep.
For me, it's hard to understand it. And like
Why would
after
you put
today,
your money in it not knowing?
yeah,
I agree with that.
And
too.
now after today, I actually understand it a lot more, and I
Yeah.
could think about investing money for sure.
Yeah.
Just don't know where to start.
Where would you start your research? Do you guys like use like an AI tool? Like, would you start
No,
chat?
I don't
Right
know.
here.
No.
Right,
Right
here.
here.
This
Yeah.
is the starting
Conversations.
point. Yeah.
Yep.
This is the starting point.
Think of a business that you might, maybe you don't go to, like, for example, Costco, right?
Mhm.
Like, you understand Costco because you go there.
Right.
There's some value there. It's always busy. Start with a company like that. And it's interesting when I tell people that is you look into a company like a Costco to start with, you find out it's actually, they make all of their money, most of their money, all the profitability of the company is based on the membership fees. So they make a margin on food and beverages and all that stuff. And gas is nothing, but they make money on the membership fees, right? So I always say to people to start, like, find a company that you frequent or you're kind of interested in, and just do some background research, right? See, how do they make money? Like, most people think Costco makes money on food and all that stuff. It's not true, right? It's just memberships, right? As long as people are renewing memberships and they're growing, that Costco is making money, and the company's done really well, as an example, right? So I always think the good way is to start with something you kind of know, and don't have to stay there, but it's a good way to keep interested, right?
The hard part about like nowadays is just like, you could search this up on TikTok and like you'll see 1,000 different things, 1,000 different people. It's just, I don't know what who to believe, what to believe. I just want to be in front of someone I trust, like you, and then you'd be like, okay, well, this is a starting point.
Yeah.
Other than that, what I see online, I have no idea.
Yeah.
Like, you could tell me butterflies is like, like
Tulips.
this is gonna blow up.
Tulips.
Yeah, tulips. Yeah, like
Right.
like this is gonna blow up. And I'd be like, well, the next video says it's fucking roses. So what do I do?
Yeah. Yeah. It's always like, what is that? Who is that person?
Yeah.
How do you trust them?
Right.
Yeah.
What's their track record? How long have they been around?
Yeah.
Can they just say something and walk away? Like, I can't do that. I'm registered. I have a license. I have responsibilities to my clients and my firm. I can't just sort of say things
Right.
that make you want to do something. It's got to be fair and balanced. So you got to find the right person. Well, simple and those, like,
That's trusted, no?
I think so, for sure.
Yeah.
And the other thing is, talk about like fees and all that stuff with investing, but the way you could save money and do it yourself is like through a place like that too, right? Like, it's a great place to start. Because fees can eat away at your returns too, right?
Yeah. I think I forget how much they take through withdrawal. It's a percentage, but it was it was on the lower end compared to
There.
other. But yeah, the thing is with me, it was like I did it. I would call it a phase, to be honest, because I was like, oh, this is so cool, and I knew how, like, the rough idea of stocks is, but I never really like saw the point, because when I was, I don't know, I was maybe 20 at the time.
Yep.
I was like, oh my god, dude, I just put $100 in this, or like $200, and I'm like, I gotta wait 15 years for this shit to, like, I'm like, no, like, right, and then I think it's like I was chasing maybe short gratification as opposed to just being smart. I looked at it differently, like, oh, this is gonna make me money, as opposed to it just like, you're compounding your interest wealth over time.
Yep.
I didn't see it like that. So, now that I'm older, a little bit more wiser, not by much, but just a bit.
I know.
I
We all
view
are.
things a little
Yep.
differently now, right?
Yep.
And then Ethereum I actually did well on Ethereum because I
Good.
had a buddy who invested in Ethereum a long time ago, and he told me back in 2019 is when I invested in Ethereum.
Nice.
And it did very well,
Good.
right? But it's obviously doing better now, and I'm like, oh, I should have.
But it's always that.
It's always
Yeah.
a coulda, woulda, shoulda thing,
That's all
right?
it
That's
is.
the thing, and I'm
For
like,
sure.
right? But I would have never guessed it, that it would have gone.
A good
where
way
it
to know something like about when you're investing is like if you own something, um, to always ask like if I didn't own it, would I buy it? Right.
That's a good point.
So like I made money on it, like you said, like somebody made money in an oil and gas stock or
Mhm.
whatever. If I didn't own it, would I still buy it today? Just because I own it is giving me a bias, right? It's making me
Right.
think like I know more or I made money. But always ask yourself, right? Would I still buy it if I didn't own it? It's a good way of kind of like a gut check, right? Head
Right.
check.
Now, another question people may be concerned about is you mentioned something earlier, well, taking a bit of money aside.
Yep.
Okay. And putting it into a portfolio. What is that percentage? Obviously, everyone's situation is completely
For
different,
sure.
but is it something as low as like 1% of?
Anything. I mean, I think people have to understand their budget. So actually look at what they spend versus their income. What could they sacrifice today for tomorrow?
Hmm.
If is it 5-10% of your after tax income that you save? I think that's a good starting point. The more you can do, the better. And then we didn't even talk about things like using tax-free savings accounts, TFSAs, registered savings plans, RSPs, parents saving for their kids' education, RESPs. Like those are also ways that you would choose to put some money away in a tax efficient way for a certain purpose, right, in the future. But anything people can do to, start saving today, like you guys are at that age where you say like, if I went back to when I was your age and I had put whatever into just the market in general, I mean, today it would be phenomenal.
You'd be Bill Gates.
Well, like Bill Gates,
No,
yeah,
kidding.
hopefully not, but
Yeah.
Warren Buffett, right? I don't want to be him. I don't want to, for different reasons.
You a Sony guy or
Right,
something?
yeah,
We'll call it that.
Warren Buffett, right?
Yeah.
Famous investor, right?
Yeah, we'll call it Warren.
This guy, he made the bulk of his wealth, like a lot of wealth, in his late 50s and 60s. But he was an investor and a business owner for, since his 20s when he's out of college. But the compounding happens over time and happens most later on, but it can't happen without the early stage. So that's what I'm saying. Like with you guys, whatever you put away today, when you're my age or you hit your mid 50s, like you'd be, it's almost shocking. I hear that from clients sometimes where they say it's shocking when I look at what that portfolio is worth because I've kind of just put it away.
And you forget about it.
Right.
Yeah.
And year to year, decade to decade, you're like, wow, like that's amazing.
Yeah.
I got to talk to you about that after we're done the podcast. No, seriously though, because I do want to like
retirement
invest. Like
Yeah.
it's true. Like we're at that age now, right? It's a weird time. Like right now, buying a home is just doesn't make sense.
Yeah, we're in that spot.
Yeah. So do something, right?
It's not the same as even when I was like your age and going to school. Like I was able to save for a down payment on a condo, right?
Yeah.
And it was like as little as like $4,000,
Wow.
right?
Come on.
700 square foot in Richmond Hill, pre-construction.
Damn.
$4,000 down payment.
Yep. In 2000.
Wow.
Yeah.
It's different.
We
So
wish.
I get it. Like,
Yeah.
so maybe it's not Canada, maybe it's somewhere else, but still that forced savings, whether it's real estate or something else. I think that's great. You got to sacrifice a bit of today for tomorrow, no matter what. Right.
Right. Now, if people wanted to find you or let's say contact you for themselves,
Yep.
Where can they find you or if you have social medias or anything like that?
On LinkedIn is pretty easy. All my contact information's on our website too. Like I have a bio under there. But yeah, I'm pretty accessible. People reach out on LinkedIn. I always want to help. So, anything I could do to answer questions, clarify anything. I love doing it. I think that's the teacher or the coach in me, right?
Yeah.
Well, Stu, thank you so much
Thanks for
coming
having me.
on.
This
man.
is awesome.
Yeah,
Great
it's
seeing
been a
you.
blast.
Yeah,
We learned a lot today. Like I told you we would, but I appreciate you coming on. It was really good.
awesome. Thanks for having me.
Thank you.
Thanks, guys.